Testing. Can everyone hear me clearly? All right, guys. So I'm just gonna give it another 3 minutes, right? 3 minutes for the rest of them to stream in, and then we'll begin today's session. All right. Today's session is a very exciting session on Fibonacci Confluence. Right. It's a very it's a strategy that I use really well to in a recent prop trading test, right, to pass it. Right. So Fibonacci Confluence, very advanced topic, right? And hopefully you guys will enjoy today's session, right? I will come back in about 3 minutes as the rest of us kind of stream in. So sit tight. I'll be back pretty soon, okay? Okay, welcome everyone to today's session. Today's session, we're going to touch on Fibonacci Confluence, right? Particularly the Fibonacci Confluence trading strategy. As the name suggests, right, confluence means there's not only one level there, but there are multiple Fibonacci levels that line up exactly there, right, to create a high probability reversal zone. Okay. Now, as usual, remember, if you have questions, don't hesitate to ask it anytime throughout the webinar. Right, I'll do my best to get to them, right? And of course, to begin, right, risk warning. Remember that everything in this webinar is educational in nature, so please do your own little due diligence before you guys trade. Nothing should be construed as investment or trading advice. Okay. Now, so for those of you guys who do not know who I am, my name is Desmond Leong. I run the award-winning research firm, Everest Fortune Group, also a Forex Army, right? I'm finalist for the best FX and best equity research in 2019, 2020, and 2021, right? So recently been taking a couple of prop firm tests too, right? I think my Forex funds is the most recent one that we passed, right? And yeah, it's today's today's webinar will focus on the Fibonacci Confluence trading strategy and how I actually use it. All right, it's a reversal strategy. Okay, it's a reversal strategy, so it works really well when in overbought and oversold situations. But you do need to have a lot more confidence when you use it, right? Meaning that it's usually against the market. So if I have my pen over here, right? And my pen over here, usually when you're taking a reversal trade, the market is going against you, right? It touches and then it reverses. This is what we call a reversal kind of contrarian style of trading. It's slightly different, right? So it's not the usual breakout trading. So most people are comfortable with a breakout trading, means that price breaks out and they play all the way down, right? This is because when price is dropping very strongly, you feel a little bit more comfortable trading the direction of price, right? But the Fibonacci Confluence trading strategy is slightly different, right? It actually plays the reversal, right? It actually plays the reversal. That means you need to have a little bit more tolerance for risk, right? Especially when you see prices coming down and then you choose to play in the opposite direction. Okay, it's a lot scarier, right? But it can also be a lot more rewarding because you can get a pretty good risk to reward. Okay, now let's begin today's session. Right, I'll be touching on a couple of things here. Questions, remember to feel free to send it through directly to me. Send it in the Q&A part. I'll do my best to answer them. Okay, let's begin today's session. Okay, so let's first touch on ideal market structure. Okay, ideal market structure, right? So this is the part where okay, there you go. When you're trading Fibonacci, right? When you're trading Fibonacci, right? One of the things that you want to do is you want to look for ideal market structure, right? You don't want a market that is too it's like too messy, right? You want to look for the markets where there are very, very clear movements, right? And this is what I mean by that, right? You need the markets with very, very clear movements. You want to look for the big movements. You don't want to look for the small movements like this. Okay. Now, let's of course move on from here, right? There are two things that you need to take note of when it comes to drawing Fibonacci, which forms the basis of our entire trading strategy, right? When you draw Fibonacci, you'll notice that there's this line, there's this dotted line that goes all the way through when you're drawing it. This dotted line needs to follow price as closely as possible, right? It needs to follow price as closely as possible to be profitable, no, to be accurate and relevant, right? So in this example, when price is like moving in this direction, the Fibonacci retracement is not very effective because price tends to deviate quite far. Price tends to deviate quite far from the dotted line. You compare that with this. When you draw a Fibonacci retracement like this, from here to here, you notice how nicely price follows it, right? Even from here to here is okay, right? It deviates just a little bit. In these kind of situations, the Fibonacci is a lot more effective because it follows price more accurately. Okay, so that's the first two things that you need to take note of about market structure. Okay, that's the first two things you need to think about when you're drawing Fibonacci retracements. Your retracement should ideally follow price structure as closely as possible, because only then will it be can you get an accurate Fibonacci retracement. So I just need to drink a bit. My throat, oh shucks, my throat is hurting a bit, so I do excuse me if I take a couple of sips here and there. And of course, when I accidentally spill it on my mouse, oh god, just give me a second. Okay, now let's continue, right? So yeah, this is the correct way. Now, a Fibonacci, let me explain to you what's a Fibonacci retracement, a Fibonacci extension, a Fibonacci expansion, and a Fibonacci projection. Okay, there are four different things and they are used differently. So if you know how to use them, that actually unlocks the secret to trading. If you ask me personally, right, unlocks the secret to trading if you know how to use this properly. Okay, so for example, Fibonacci retracement, you only pick 1 point and you pick a second point. Okay, when you pick 2 points, you then be able to your starting point and your ending point. You're trying to see how far price will then retrace upwards. Okay, so you tend to have a few traditional 23%, right? 38%, 50%, 61. This basically means like how far you're retracing. If you retrace 50% of the entire move, that means if the total drop was 100 pips, right, and you retrace 50% of the move, it means that it's a 50 pip price has moved back up by 50 pips. Okay, so that is basically what it means by Fibonacci retracement, right? 23, 38, 50, 61, all these different numbers, it basically is simply, right, the percentage of the move, right? So if price comes down and drop all the way here, if it bounces up by 50%, it basically means that it has retraced 50 pips, right? Assuming the drop is 100 pips. And if it retraces more than that, right, this is the 61, this is the 78, right? It basically means how much of the original movement it is recovering from, okay? Now, the next thing we do is Fibonacci projection. Fibonacci projection is a little bit more complicated, but it basically means you see the starting point here and the middle point. Okay, you are taking the distance of the starting point to the middle point, right? You're taking the distance, like let's just say the distance is 100 pips, right? And you are projecting it onto here, which is another 100 pips, right? So that is what it means by 100% Fibonacci projection. Okay, it means that you're looking for price to touch and then bounce from there. Okay, we are looking for price to touch and then bounce from there. So that is basically what a Fibonacci projection means, right? I'm going to erase it over here. I'm going to draw it again for you. Very simply, Fibonacci projection means that you're taking the distance from, if you have a movement like this, you're taking this movement. It could be 100 pips, and you're projecting it over here, maybe another 100 pips. This is what I mean by a 100% Fibonacci projection over here, right? So we have stuff like the 100%, we have the 61% projection, we got the 78% projection. All of it basically means that, you're taking the distance and you're multiplying it by 61, 78, or 100, right? When you're forecasting when the reversal is going to happen. That is the meaning of Fibonacci projection. Now let's talk about Fibonacci expansion. It kind of looks like the same thing, but you only have one starting point and one ending point. Price must minimally retrace at least 50%, minimally 50%. So if it retraces to 61 or 78, it's fine. What then happens is that you forecast price to go up to reverse off the negative 27% level, right? And you can see that has happened very nicely over here, right? So this is the trick to Fibonacci expansion, right? You are literally just forecasting when price is going to reverse, okay? You're literally just forecasting when price is going to reverse right here. Okay, it's a very, very important rule too, right? Because it is one of the few market leading indicators out there, right? It's one of the few market leading indicators to help you like forecast at what point in the future is price going to reverse. Very few other indicators are able to do that. Okay, guys. Now the last one I'll talk about is called Fibonacci extension, right? So Fibonacci extension, I call it like a Nike tick. You have your starting point of your Fibonacci retracement here and your ending point over here. It will then retrace two key levels, 127 and 161.8. Those are the important Fibonacci levels that you need to refer to. Okay, and once you rise up, right? Once you rise up to the 127 and 161, what happens is that price tends to reverse from that level. Okay, so that is what we call a Nike tick. Nike tick is very, very straightforward. It's a very, very straightforward setup, right? And you're looking to play the reversal from the 127% or the 161.8%. I'll be showing you some examples of this later. But the key thing here is that we have looked at Fibonacci retracement, extension, projection, and extend. The four Fibonacci, four types of Fibonacci. How we're going to use that is this concept called confluence. Okay, it's this concept called confluence, right? So as you can see, we can start with the Fibonacci projection, 100%. We can start the Fibonacci retracement, expansion, extension, and we found 1, 2, 3 reasons why price might bounce off this area. So this is the meaning of confluence, right? You line all of them up together, it creates a nice area. And what happens is that when price tests that level, tests that area, it tends to reverse very nicely, right? Because you have not only 1, but you have 2 and 3 reasons why price might bounce from that level. Okay, so that is the concept of Fibonacci confluence, right? You don't just trade it. you don't just use a single Fibonacci to trade it, you combine multiple of them together to be able to execute the trade, right? Usually it's a reversal trade. Okay, guys. Now let's look at some examples, right? So we take some time to look at a couple of examples on using Fibonacci Confluence. Okay. Just I probably need to turn off my video over here just so that it doesn't mess with the charts. Sorry, just let me load this. Let me just make a copy, right? Okay, let me show you some examples of Fibonacci Confluence. We try to look for them together. Oh, sorry. We try to look for them together, okay? So I usually have my Fibonacci retracements when I draw it. I have this thing, all the different Fibonacci levels over there. When I use all fibs, okay? When I use all fibs, it actually shows me everything. So over here, the middle part is what I call Fibonacci retracement. And once it retraces beyond the 100%, this is what we call Fibonacci extension, EXT. And if it comes down here and it comes further down, this is what we call Fibonacci expansion. Okay, these are the three types of Fibonacci, right? We got the retracement, we got the extension, and we got the expansion. And these three will actually unlock a lot of the key secrets, so how you can call reversals. Okay, let's take a look at some examples. We're looking at euro dollar now. Actually, let's look at pound dollar. When you draw a Fibonacci here to here, what do you notice, right? I'm just going to highlight one key level, 127%. You will notice I'm going to do a bar replay feature over here, right? That price actually went all the way up, right? Price went all the way down. It went all the way up. It touched the 127% and it retraced back to the 100%. This is a very, very good trading strategy, which I use by myself, right? I use myself and I reached a decent amount of profit, right? I see if I have the picture over here, right? But basically, just let me see if I have it. There you go. You know, it's a good 8% that we made over here already. So as you can see, let's do a save as a detailed report. Yep, detailed report. There you go. Right. Yeah, basically, it's a good amount of trades that you see over here, right? You got about an 8% profit, right, with a 2% drawdown. It's enough to 2.7% drawdown, 80% win rate for short position, 50% win rate for long positions, right? Right. Most of our trades were profitable, 65%. So it's a nice 65% hit rate, right? Pretty good risk reward. Like average profit is 1147, average loss is 920. So you know, managed to make pretty good, decent money with this setup. Okay. Now it is the setups I took was purely from here, right? We take the reversal of the 127 and play it down to the 100%. Okay. Now the success of this strategy lies in confluence. Sorry, just give me a second. The success of this strategy lies in confluence. Okay, what do I mean by confluence? In this particular setup, right? If I were to do a bar replay feature, so I think it was a 4-hour chart. Right, in this particular setup, when we did the Fibonacci retracement, Fibonacci extension, I noticed there's a 127 over here. The 127 also happened to line up with this swing high resistance. Okay, this multiple swing high resistance, meaning that I have 127, I got one swing high, I got two swing high. So it's a high enough chance, you know, we got 1, we got 2, we got 3 reasons why price might touch this level and reverse. Okay, we got 3 reasons why price might touch this level and reverse. And true enough, from there, right, let's go bar by bar. Right, price actually comes up here, touches this level, and reverses very nicely. You can see it reversed and it reached our 100%. So this is what I call the Nike tick strategy, right? You're really just looking to play the reversal of 127 all the way down to 100. How you can improve this strategy is one of it, of course, having a very clear Nike tick, right? Very clear V that you're looking for. The other is when you combine it with support and resistance. In this case, we got swing high, right? Price reacted once, reacted twice. When price finally came up again, it was going to react again. So there were 3 reasons why price was going to drop. Okay, combine that at 127% extension, the Nike tick kind of Fibonacci extension, you got even higher probability trading strategy. Okay. Now, of course, you can combine it with different forms of Fibonacci. Let's try to see if I can find any over here. Let's see. I'm trying to find one with a little bit of a Fibonacci projection too. Let me see if I can find a good example with one with a Fibonacci projection. Okay, this is one example. This is one example over here. So let me just make sure I get this right. So as you can see over here, right, very nice Fibonacci extension. This is a nice little Nike tick that you're looking at, right? You can see it's a very, very nice Nike tick. And it comes all the way up to here, this 127. Okay, I'm going to leave this 127% over here. Because at the same time, there's a very nice Fibonacci expansion, right? Remember the rule for Fibonacci expansion. The rule for Fibonacci expansion is that price needs to minimally retrace 50% of the entire move, right, before you can consider a bounce, right? So we got over here 127 and negative 27. So what we call a confluence area. This is a confluence area. Okay, so what then happens is that we wait for price to reverse from this level and play the move down all the way down to here. This would be where we play the reversal from and until. Okay, so here we go, right? So we can see price, you know, bar by bar, it starts to reverse, it starts to reverse. There we go. And price will have hit our take profit then. Okay, it's a simple enough reversal that you're looking for, but you notice that I will not trade based on the 127 alone. I mean, based on 127 over here, right, a zigzag Nike tick, right, 127 is already pretty strong, right? But if you throw in this Fibonacci expansion with a negative 27 up here, them combined, right, actually causes, you know, it gives you a much more higher probability setup. Okay. Now, if you really want to really improve your probability of you getting a good trade, I believe you could throw in a little bit of RSI. Because you can see over here, for the RSI, right? When price was starting to do the reversal at the key level, right, it was a bearish divergence. Bearish divergence, and bearish divergence is when the price, the highs of the price is going higher, means it's climbing, right? And in this case, stochastic RSI is going down. So in this example, right, it's a bearish divergence, right? We have not only the 127, we have not only the negative 27, right? We also have a bearish divergence, you know, versus stochastic, no, versus RSI. So that is gives you a good probability that price is gonna drop. Okay. Okay, I see a couple more people over here, right? Let's see, Mr. John, right? Yosef, right? Damir, Mr. Damir, are you around? I just want to make sure that you can hear me clearly, right? If you can hear me clearly, feel free to send a message in the chat. All right, Mr. Damir, right? Okay. Let's continue today's session, right? So this is an example of finding Fibonacci, a Fibonacci expansion along with a Fibonacci extension. So this is expansion plus extension plus divergence. Okay. All three of it lining up very nicely to call this reversal over here. Okay. Let me try to look for a couple more examples. Right. So we got Kiwi dollar. Okay, there we go. This example, I should be able to show you a little bit more confluence over here. So I tend to look out I tend to use the Fibonacci extension as the leading indicator of what might happen. So the Fibonacci extension usually works when you start to spot a letter V. Whether it's a V or inverse letter V, the moment you see it, right, it is time for you to start mapping out your Fibonacci extension, right? So the moment I notice this letter V over here, whether it's an inverse V, I start drawing a Fibonacci retracement from one place to another place. Okay, now that it's over here, what I then do is I will highlight the 127% Fibonacci extension over here. Okay, so we're looking for the reversal for price to come all the way down to here, touch this 127 and come back up to the 100%. Okay, it sounds like a simple enough setup, but if you get it wrong, it can be very dangerous. Okay, so 127 over there. Okay, let's see how price actually panned out. Bar by bar, you can see it go down, go down, go down, go down, go down. It touched the entry, right? And it bounced back up to the 100%. It might even bounce before that, but yeah, it bounced up to the 100%, right? You see it come down, touch the 127, then it do a small little nice bounce. So this move is all you need to make money, right? You don't care about what happens after that, but this move is all you need to make money. Okay, yeah, so that's another example of using the 127 Fibonacci extension, right? I'm going to try to find an example for you where there's a Fibonacci projection. Okay, we got another example over here. Okay, in this example, right, we can see that price is starting to create a nice little ladder V, right? As you can see over here, right? It's starting to rise up nicely and it's starting to reverse, okay? We look at the 127% extension over here and we're like, okay, looks interesting. I then do a Fibonacci projection with this as the top, the middle, the ending point. What we then notice, right, I'm just going to remove everything and leave the 127 over there, is that there is a 127 and there's a 78.6 Fibonacci projection, right? So it's all lining up over here, this area over here. That means my pending order will be in this region, okay? What happens when it's like this, right? We can see, let's show you. Price pass, touches that level, and it bounces back up, right? So you have been able to play this little bounce here, making you a fair bit of money, right? So it's all about finding the extension level and combining it with like other forms of technical analysis. You can use the Fibonacci projection, you can use a Fibonacci expansion, and you can use a Fibonacci retracement. So if you were to use a Fibonacci retracement in this circumstance, let me see if it works out. Usually it's a lot harder. Yes, usually a lot harder. Yeah, okay. We'll leave that out. Okay, so that is a great example of using Fibonacci extension with Fibonacci projection, right? I'm going to go through a couple more examples, guys. If you have questions, please ask them, right? Don't hesitate to ask them, all right? Try and find a few other good examples of Fibonacci. There we go, right? This is another really, really nice example, which might just line up with a bigger retracement story. Nope, right? But it might line up on the shorter term time frame. Let me see. You can see that price actually goes all the way down over here, and it's starting to form a nice little Nike tick, right? And it actually comes all the way here, touch the 127, right? And then reverse back down to the 100%. Okay, so this is another example of using a Fibonacci extension. The trick, guys, is really in finding the tick. It's not easy to find the tick, but once you find the tick, you know, you're a lot trading is a lot easier for you, right? The trick is really in finding the tick. Let me see, even in such a situation, can you find a tick? Yes, you can, right? And if you can find the tick, you probably can find the extension. Okay, you can find that. Okay, let me show you another example, a really, really good example. Okay. We can see price over here, right? It looks like it's gonna form a nice little reverse Nike tick. Okay, so we take a Fibonacci retracement, we start from the bottom here and to the top. Okay, we got a nice 127% Fibonacci extension about there. At the same time, you know, you have a nice little Fibonacci expansion, price goes down, retraces minimally 50%, right? But it doesn't kill you off completely. You know, so here we go, retrace minimally 50%. In this case, it retraces all the way up to here, then looking for the move down. Okay, so here we go. Here, touch the 78.6, and we can see a negative 27% all the way down to here. This lines up with a 127% Fibonacci extension too. And of course, we got one more level, which is the major Fibonacci projection, right? From here, all the way down, all the way up. And we have a 61.8 Fibonacci projection here. So we got 1, 2, 3. We got 1, 2, 3 reasons why price might bounce, right? So we're going to highlight this area over here. Okay, I'm going to highlight this area over here. And what we're expecting is for price to actually come down touch this level, and bounce up minimally to this level where it kind of broke out from. Okay, and this happens way too often, right? We can actually see price come down, come down, come down, test that level, and then it bounced up. As you can see over here, it bounced up and it kind of hit this take profit. Okay, this is one of the beauties of Fibonacci Confluence, right? You find an extension, you find a retracement, you find a projection, you find an expansion, extension, right? All of it lining up together, at least 3 of them lining up together. It gives you a really good setup where you can play a small little bounce from the entry to the breakout level, the 100% where you were at. Okay, guys, you can combine this with support and resistance. You can combine this with trend lines. You can also combine this with Fibonacci, right? So the key is what I call Fibonacci Confluence. Try to at least find 2. You can find 2 that lines up is great, right? So you got your Fibonacci extension, right? You got Fibonacci retracement over here. You got Fibonacci expansion, and you got Fibonacci projection. Okay. This fall, you minimally must have 2. I usually like to find retracements with projections. They tend to work very well. I like to find extensions with projections too. Okay, I really like to find extensions with projections when they line up over here. 127 and the 61.8 usually works out quite well. Projections and retracements work quite well. Extensions and retracements also work out quite well. Right, and of course, extension and expansions tend to work a little bit less. Right, but they can work out well. As a supporting argument, if you get expansion after having the rest, right, it's worth consideration, but I will not use it by itself, right? So I kind of put this maybe in red. Yeah, so if it's a expansion with anything else, it's not effective, but if an expansion as a supplement to the other Fibonacci's, right, it's actually a pretty good setup. Okay. Now, guys, I spent a good 40 minutes explaining Fibonacci to you guys. I'm just going to open the floor for 1 minute for anyone who has questions regarding today's webinar. Right? Does anyone have questions regarding today's webinar? Okay, so now that I'm moving away from the slides, no, from the charts. Turn on my video again. Does anyone have any questions regarding today's webinar? Right, if you know how to master Fibonacci well, it will really help you when you're finding confluence, when finding reversal. It's very effective in finding reversals, less effective in finding breakouts. Okay, now, okay, I can see that there's not many questions coming through, and I appreciate that. I hope the explanation was clear for you guys. Right, thanks for taking the time to come to today's webinar. Right, I hope you found today's session useful. Apply in your trading, whether it's any form of retrace Fibonacci. If you can use it to combine and find areas of confluence, not only with Fibonacci but with other support and resistance, with other price action levels, right, you can actually come up with a very good trading strategy. Okay, now that's it for me, guys, today. Thank you very much for staying throughout. Right, if you have no questions, end today's session. I'll catch you tomorrow for a live trading session. Stay safe, trade safe, and I'll catch you guys tomorrow and next week.